Welcome back to Business Unusual. We're still taking a look at our top business stories, and with me in studio to do this is Maudi Lenstoane from Lehumo Investments. Now, Maudi, before we went to the break, we're talking about the volatility of the South African rand and some of the factors contributing to that. And off air, I was saying I would not want to be Jerome Powell if Donald Trump's tweets are anything to go by. And we saw some of these rants over the weekend about United States monetary policy. But when we look at this from the perspective of us as consumers, people who spend money every day and who earn hard-earned cash, what impact is this going to have? And really, I mean, what impact is it going to have on the key industries that are reliant on imports, be it for their own machinery or even for the goods that they sell?
Look, it's quite negative, you know, especially for the consumers. I mean, we've just had the rand literally move from 14 rand, then about to almost close to 16 rand. I mean, which is where we are in less than a month. So it's quite negative. I guess from a South African perspective, is the good news is that you've also had the oil price also come under a little bit of pressure, and that's coming from that trade, tension again. I mean, the number one economy and the second largest are at war with each other, and it's creating so much uncertainty, you know, for the smaller economies, including South Africa, and of course, it's really creating so much uncertainty. We heavily rely on those trading partners, the likes of China, you know, for them to buy these commodities that we mine and also, you know, buy from us in terms of other goods that we produce. This uncertainty, it's not good. It feeds into the consumer, you know, the weaker rand. It results in high inflation. It's not good for us.
And when we take a look at that alongside some of the numbers that many economists are anticipating this week, we saw the retail numbers looking much better in the month of May than what many people expected. And many economists are coming out and saying that they are expecting an improvement here, a sizable one. And this on the back of more retailers coming out, putting out more discounts, giving more favorable lay-by conditions for people to, I guess, effectively be encouraged to purchase some of the goods that they sell. This on the back of much weakness that we've seen, even in some of the results that many of the retailers have announced.
Yeah, look, it's a very difficult position that these retailers find themselves in. They're having to now maneuver and, you know, find ways of trying to get an extra sales. The fact of the matter is the consumer is under pressure. Yeah. If you are not creating jobs and people don't have they don't have jobs and they don't have an income to buy, you know, it's a very difficult environment for those retailers to really find themselves. I mean, you look at their numbers. So they basically taking from their profits and basically passing them on to the consumers. And it's just not sustainable going forward. But of course, in the short term, there is a little bit of support. And I think South Africans have been resilient. And we've seen this even during the difficult period where the first quarter GDP came in negative. Yes. The retail sales were still not negatively impacted. So it shows that those retailers are really doing a lot to try and really support the market. But what is going to sustain it going forward? It's an improvement in the economy, and it's making sure that people have jobs so that they can continue to buy.
And if the rand continues in the vein that it continues, I mean, we do know that an extensive part of what it is that we buy from a retail perspective, be it textiles or even some of the food that we import right through to fuel, many of those things are either imported themselves or have substantive components embedded in them that are imported. And if we see the rand performing in the manner that it does, what impact does that have from a cost pressure perspective for many of the retailers? Again,
that's going to really put in push those costs higher. We've had the 25 basis point interest rate cuts from the Reserve Bank. Yes. I think if we continue with this trajectory, this will be the last one, that interest rate cut. What would really, justify another second cut is if inflation remains within, that 4.5, the midpoint, which the Reserve Bank is looking at. And I think it's very difficult to justify how it's going to remain around that level with the rand, obviously, under so much pressure. So again, we might not see those interest rate cuts coming through if we continue with this weakness.
Yeah. Let's take a look now, and I'm quite interested. I mean, when we look at these factors in combination, you look at the weaker South African rand, you look at the issues around Eskom, which might end up having to go to the National Energy Regulator and ask for more money from us as consumers. And you look at some of the issues that we're having when it comes to a consumer and business confidence perspective. What kind of hand does that deal to the Monetary Policy Committee? You've suggested now that we're not set to see any, I guess, another rate cut anytime soon. But what does that mean for the medium-term environment and that kind of cutting cycle, if at all?
Look, my view has always been that the Reserve Bank needs to distinguish between really this inflation that's coming from things that have got nothing to do with the South Africans. You know, it's the weaker rand, it's the higher oil. It's not a demand pull inflation, it's more of the cost side. You really can do nothing about it. If you increase interest rates because of that inflation, you're not going to bring it down. And I think they need to play that supportive role, especially in an environment where globally you've got all the central banks having that accommodative stance. So they need to be bold and say, yes, in the short term we might have inflation, breach that target, but we need to support, the economy. We need to support the consumers and make sure that they remain within, affordable means, because clearly the consumer is under a lot of pressure from the tax perspective, higher cost of electricity, and now having to deal with the higher interest rates. It's just, unbearable.
Yeah, talking about some of those costs, I mean, a sizable chunk in any household budget is expenditure on health services. And I want us to maybe just touch briefly on the impact that much of the announcements around the NHI have had on the stocks of health funders like Discovery. And we also heard Western Cape government earlier on coming out and saying, introducing this bill in its current form at this juncture set to confuse, I guess, the role that provincial administrations have in the provision of healthcare, because we do know it is a provincial function. I guess, how has the market responded to that? And does it certainly give confidence to many of the policymakers that, we're moving right ahead and we're getting the consensus that is necessary to make this a credible move? Yeah.
So look, there's two issues here. I think the NHI, it's something that needs to be done. I think it's very good. It's a good initiative to have a universal healthcare system for a country such as ours. It's been done by other countries, and it's been done successfully by many other countries. So we can actually replicate that and learn from how it's been done and implement it in our own country. The fact of the matter, you cannot have two groups where these are taken care of, and the poorest of the poorest are just basically not, being taken. They don't have access to quality, healthcare. So we need to bring we need to bring them up to that level where they've been taken care of.
Maudi, talking about this, somebody said to me that you've got the same level of expenditure between the public and the private sector. But in the public sector, it services about, I think, 82% of the population, whereas the same amount of money spent in the public service in the private sector is there, but only services about 18% of the population.
And that's the thing. That's why you've seen the share price, such as from Discovery, is coming under so much pressure. Because ultimately the private healthcare system, the medical aids, that money gets collected from you and I, and some of it goes towards making sure that they pay dividends for those for those shareholders that owns those companies. So we're saying remove those shareholders, remove those dividends, and make sure that this is the money that is collected towards a healthcare service.
Lastly, I want us to take a look now, Maudi, at Omnia. Now, they're a fertilizer and explosives maker. They've come into some issues here. If we are to give some context, they came to shareholders early on in the year and they said, we're well capitalized. Yes, we've gone on an acquisitive spree. We're buying up all manner of assets that we felt were synergistic to our business. And then a few months later in March, they come out and say, we're going to have to go with a begging bowl to shareholders again and ask for a 2 billion rand rights offer.
No, they miscalculated. I mean, you look at just exactly that duration when they previously said, no, we're doing just fine. And to come back and say, now we need to really restructure. They are coming under a lot of pressure. The cost of that debt is really hitting the company. And it was inevitable that they were going to come through and do this restructuring. That rights issue coming through at a massive cost to them, and it's 41% discount to the current share price.
It's coming at 20 rand, right?
20 rand. And I think the share price is around 38 rand. So it's a 41% discount. But it's necessary, and they have to do it to deleverage some of their balance sheet and make sure that they reduce that debt. Otherwise, it's not sustainable going forward.
We've heard some murmurs of people, I guess, flagging many of the leadership who have now departed from the firm and saying that it was improper for them to go out and make this kind of assessment, go on all of these acquisitions, ramp up this kind of debt for an entity which 2 years ago potentially had very little debt in its balance sheet.
Yeah, look, I think justified definitely to really make those assessments. I mean, the management accumulators, they were very aggressive. And you can't be aggressive in a very difficult period. We've been in a very difficult period since 2008, really never came out of it. And to have gone aggressively on the market and accumulated such debt within such a short period of time, I think, granted, they need to be criticized for that.
Where do you see this ending up? I mean, yes, shareholders have approved the rights offer. Came out earlier on in a SENS announcement today and saying this is going to be priced at 20 Rand a share, and also indicated who some of the people who would be underwriting this one. But yes, with this injection of 2 billion Rand, what does it do for the balance sheet of Omnia? And more importantly, what does it do for some of the loss-making acquisitions that they've made recently? Do you dump them, or do you retain them and hope for when the sun shines that you'll be able to sweat those assets?
Yeah, so look, I think they getting a 2 billion cash injection, that's good. It needs to be deployed wisely and make sure that, some of those assets, they reduce the debt first of all, but also ensure that some of the assets that are not really producing the results, they need to relook at them and maybe even consider selling them.
Sure.
You've seen the reaction of the share price. I think it was initially a massive scare to say, wow, 20 Rand, 41% discount. We saw a drop of about 9%, but I think we've recovered. And I think the market, once digested, after digesting the statement, they realized that perhaps it's not as bad as it could have been worse.
Okay, Maudi, we'll have to leave it there, my brother. And once again, congratulations on the new addition to the Lenstoane family, and do send our regards to you and yours.
Thank you so much.
That there was Maudi Lenstoane. He is with Lehumo Investments, talking to us about the big news in the marketplace that is moving markets and shifting economies.